The economy is top of mind for a lot of people, from the jobs report that just came out this morning to the Fed lowering base interest rates last week. We have a new understanding, by the way, of how it all trickles down to us every day, though I think we feel it, right? Joining us now is St. Louis Fed economist Chuck Gascon to talk about the latest Beige Book report. Thanks for being here.
Happy to be here.
I love talking about the Beige Book, and we always start with what is the Beige Book, but really it's kind of a way for us to see what's going on in our region, right?
Yeah, the Federal Reserve System across the nation has a deep network of business contacts and community contacts, and so we talk to business leaders across the St. Louis area and across our 7-state region just to get a pulse on what's going on in the economy today.
And it's pretty stagnant overall?
Overall hiring is relatively stable. Price pressures are still elevated, but they have eased a little bit, and a lot of employers tell us they're just kind of pulling back on their hiring plans as we move into next year.
I think we've been using the term no hire, no fire in general.
Yeah, sticking and staying, that's one I hear a lot.
Sticking and staying, okay.
Yep.
All right, yeah, because I know a lot of people who are applying for jobs, by the way, and it's like their applications go out into the ether. They're like, did it go anywhere? Is someone looking at this? So
yeah, in the last consumer confidence report, one of the things that showed up was that it was a pretty steep drop, and a lot of people noticed that the labor market outlook was just a lot weaker. They're having a hard time finding jobs, and just not as many job openings out there as we've seen over the last year or so.
Yeah, we've also been talking, stay with your job if you can right now. You mentioned this just now, but the latest report shows some changes. Specifically, you said in prices and then also consumer spending. Can you talk about that?
Yeah, there's a couple big factors that have happened over the last couple months. Most notably, the government shutdown, and I know that's in the past now, but a lot of people were impacted by it, either directly through layoffs, but then also just the way the supply chains work and the role that the federal government plays just led to weaker demand, and we also saw a pullback in consumer spending just as people weren't really confident about the outlook. Given all the turmoil that was going on in Washington. So that really led to kind of a pretty big pullback in consumer confidence and people not knowing what was going to happen over the next couple months.
And you still see that. Obviously, we do holiday spending stories every single day, and people are now more in tune than ever how they're spending their money. Mm-hmm. And we even saw people saying, okay, we're going to do secondhand this year, or we're not going to do big gifts this year. There's so many people who are really worried specifically about the holidays since we're just less than days away.
I'm anxious to see how the holiday shopping numbers turn out. When we look at our comments from retailers earlier on in the season, like early buying, something that we saw the last couple of years, with supply chain disruptions, people were out saying, I got to make sure that everything arrives in time. So you saw a lot of early buying the last couple of years, and that seemed to have pulled back. It did seem like some stronger sales picked up kind of after we got into Black Friday shopping, but we should hopefully have some good idea in the next couple of weeks how everything played out.
It'll be interesting. I certainly think oh wait, it's still Cyber Monday. I look online, I'm like, wait, we're still doing all these deals because people really, I think,
people are looking
money.
They are looking for deals, and you hear that from a lot of businesses. Their costs have gone up, but they're looking to pick up market share, and so they're trying to be competitive on their pricing.
That's really interesting. So last week, the big headline was that the Fed dropped interest rates again 3 times this year. Yep. Is that something that is normal? I feel like we haven't seen that in a long time, right?
Yeah, over the last couple of years, you saw, inflation pressures really pick up. We had inflation in the 5-6% range on a year-over-year basis, and so the central bank raised overnight interest rates, a pretty significant amount to combat higher inflation. The labor market was really tight. Over the last couple of years, inflation pressures have come down. I know it doesn't feel like that for everybody. Mm-hmm. A lot of that's still catch up that you're seeing. And now you're seeing a labor market that's starting to cool a little bit, so trying to get things back in balance.
Yeah. So when you do these reports and you gather your information, how are you talking to people? Do they come to you? Do they report to you? What do they do?
A lot of different ways. So we'll run surveys online. We also have one-on-one business leader meetings. We'll have roundtables where we invite people into the bank and talk about what's going on in the economy. We had a Fed Listen session earlier on this year. We had hundreds of people come in, just talk to policymakers about what they're feeling and what they're experiencing in the economy today. And then I'll go out and talk with Chamber of Commerce groups and share what we're hearing and pass that information back out to the public.
So you're like a therapist for people.
I don't know about that. We're trying to take what's really going on in the economy and match it up with the data and help inform the outlook. Mm-hmm. And the data that we have is backward looking. I mean, if you think about right now, the inflation data we have is from September. We're in December now.
True. Okay, so I have a question, and I want to maybe lift people up.
Yeah.
Is there anything promising, when you talk to all these people and you gather all your information for the Beige Book report, is there anything that seems like a window of hope or excitement for folks?
I think the window of hope that is always there is that the U.S. economy is very resilient, And as much as business owners, have struggles, they don't just quit because things are difficult and say, okay, I'm just going to close up shop and walk the other way. That's just not how this country works. And so people work through it. And they figure out how to, navigate new markets as they develop and continue to grow. So if you look at the outlook as we get into next year, it's one of pretty solid growth. Inflation pressure is supposed to come down, and the labor market's supposed to remain relatively stable. I mean, that's the baseline outlook, but there's still a significant amount of uncertainty out there.
Yeah, but hopefully if everything happens the way it's supposed to, maybe we'll be okay.
Fingers crossed on that,
crossed,
but
yeah.
I'm feeling pretty good about it right now.
Okay, so where can people follow your work and everything that you're doing with the Fed?
Yeah, so the stlouisfed.org, it has all of our research and economic data as well, so you can get all the data you want on the St. Louis economy, but also the national and global economy as well as in our FRED database. It's an awesome resource for everybody out there, and it's all free.
It's a great resource, and I love the educational tools too. There's
Yeah.
so much going on that website.
Thanks.
So Chuck, thank you so much for being here. Really appreciate your insight, and keep doing the great work that you're doing.
Thanks. Happy holidays.
Yeah, happy holidays. Thank you.